Hey folks, welcome back to Money and Politics. It's so great to be back with you, and I'm sorry, I think I've had the longest delay of doing a video since I started doing them. And by the way, I started doing this channel almost exactly 6 months ago. It's going to be coming up later this week. Today's June the 21st, first day of summer. It's actually cool here. Friday, we had a heat index of about 100 degrees. And tonight it's going to get down to 55 degrees. So that's life in the Midwest, folks. I mean, we might have the heat kick on. I hope you had a great Father's Day if you're a father. And I'm going to show you, by the way, just a couple of pictures because, as I told you, I had to. I didn't have to, but I wanted to go up to Chicago to see two of my three boys, and of course it was Father's Day, and so that was all part of it, the appropriate time to go. So if you don't mind, I'm going to just whip through this real quick. If you do mind, I'm going to talk about stocks, but you can go ahead. So this is my number two son, Andrew, and then my son, John, who is moving to Florida. This is looking down from, he lives in a high-rise in Chicago. This is just off of Lakeshore Drive where the boats gather. And there is number three son, John, who is going to Miami. And so he was just about to, he sold his condo here in this building, is going to be in early July moving out. So it was one of my last times I could easily connect with him without flying to Florida. So here we have, there's a pool on the roof, and we had the opportunity on Saturday to hang out at the pool. I got up there on Friday. This is just looking down right next to Water Tower Place. If you're familiar, that's that's North Michigan Avenue right there in the middle. That's the John Hancock building, that dark building, one of the, I think it's something like the, I don't know, third largest building in America, tallest building, about 100 floors. Looking down, you can barely see in the lower left corner the tower of Water Tower Place. When the city of Chicago burnt down in 1871, the water tower there, you can see the greenery in the lower left, and that white tower, which is stone. The water tower was one of the few buildings, structures, before 1871 to have survived the Chicago fire. And so we had a wonderful opportunity to get together and meet, and two of my three, I actually have four sisters, two of my sisters are nuns, and coincidentally they were able to join us in Chicago as well. My sister, we call her by the name before the nun, my sister Renee, from Marine. She is the principal at Catholic High School down in Pensacola. And so she was up from Florida on the Panhandle. So anyway, I had a great opportunity to visit. You can see some beautiful vistas, beautiful buildings going. This one's a brand new building being built there. Hard to tell with the roof, it's still being put together. And there again, it's the John Hancock Tower next to the Ritz-Carlton, which is on the right. And so that's it. So that's what I did over the weekend. It was nice to do that. I had meant to do more videos leading up to, and not take off Friday, but not take off some of the other ones. But I just had we had a special session of the legislature here in Illinois, which I had to cover. It was on energy, and I'm thinking maybe I will do something on that, because while it pertains specifically to Illinois, these issues are also more national or even international. And a lot of times the problem with issues like energy is that we don't get good coverage. And that's in my day job and the journalism job, what I try to do, kind of what I'm trying to do with investing. I think a lot of times investors don't get all the information that they should be getting. So I might come back to that. I'm not going to do energy today, other than to say, you know, I've talked so many times before about DIG. This is the ETF. It's a leveraged ETF, I should say, on oil and gas. And here's the action from today. Up 8%, $5.59. And remember, this split back in January, 2-for-1. So, as I say that, I'm trying to remember if it was in January, but it did split 2-for-1 just recently. So in November, when I was pushing this at $63 a share, the equivalent, when you look at basically what is $73 close today, and you can see in after hours it's up even more. So it's close to $150 now, where it was $63. $150, I'm just doubling it to compare the price of November to the price of today. The price of oil, we can see if we go to the top of Yahoo here, it closed at $73.50. One person who I follow today on the news said they thought the price of a barrel of oil might go to $100. And this is, so I wanted to bring that up. And so oil and gas, fossil fuels, we have the story that I would go into, are some of the politicians trying to target fossil fuels and take us to just clean energy. For now, I'll leave it at that. The reason I talk about money in politics and why I called it there is because so much of politics impacts our money and our investing landscape. And it's important for us to be aware of that. Now, that said, Humble was down a little bit today. I'm just going to leave Humble pretty much alone tonight because we're still in the, where we are, I'll follow up with it certainly this week, but we're in the waiting game with Humble. It's just where it is what it is. It went down on panic back in May 20th, hit $76. It's up, went up to $1.70. It's now at about, I believe, $1.30 or so. And the thing is, I just think that we're just kind of waiting. We're going to have coming up, though, what is today, the 21st, probably in about 3 weeks, I'm going to guess, we're going to have the second quarter earnings. So that'll be something to look forward to. And certainly there's no doubt that we'll have other news coming out too. I had said, and you probably don't remember, that there was a lot of infrastructure building in that period between January and, let's say, April, that whole first quarter, January, February, March. We ended up that first quarter, a lot of infrastructure building. And here, Humble just moved into the new headquarters. I think now we're getting into the dynamic nature where we're going to be seeing more news, more things happening, more updates. And so the story of Humble over the next 6 months, I expect to be more interesting in many ways than what we've had in the previous 6 months. And again, folks, I say, it was just coincidental that I started on January the 25, my first video, and it turned out to be Humble. But what a story this has been on that stock. And I said I wasn't going to cover it, but just to put this in context, I had thought about talking today, coming back to you, just about context, just to kind of say, let's stand back and take the 30,000-foot view of where we are, rather than just looking at what the stock price is today, which is why I didn't want to spend any time on it. I think I think for Humble investors, we're good to take the big view, okay? And we'll continue to develop that and do some other interviews. In fact, I got to get back. We want to do some more interviews on the NFTs that we did not too long ago. Now, that said, I wanted to address one other thing about Humble and Forwardly. And I had a letter, I won't identify the gentleman, who was asking me some questions. And I want to make sure that I don't know if he was just confused or if other people were confused. But in going over the relationship between Forwardly and Humble, this one gentleman was confused about Forwardly being warrants on Humble. Now, we may have used an analogy like that, or other people I know in posting may have used analogies like that, but you should all understand that Forwardly is one company, symbol FORW. Forwardly is one company, and Humble is another. You can't exchange your Forwardly stock for Humble shares, and this gentleman was confused about that. You cannot exchange your Forwardly stocks for Humble. What you can do is buy Forwardly on the idea that, number one, it's cheaper, and that as Humble goes up, it's going to go up as well. FORW, I'm going to just real quick here. And it always does it. Brings up the wrong symbol. I don't know why it does that. Wants to give me Ford Motor Company. Is at 20, let's call it 21 cents. So it's at 21 cents, where, you know, Humble's like $1.30. So some people think you're going to get a bigger bang for the buck on Forwardly. The one thing I would say is ultimately what you want to be holding on to between Forwardly and Humble, ultimately you want to end up owning Humble. So no one has a crystal ball, folks. We don't know which is the better one over the time, but I think Humble is what you want to hold in the long term. You can buy Forwardly kind of as a tag-along stock, for lack of a better term. The point is it's not a legally a warrant. You don't make the exchange like this fellow said, and I wanted to make that clear. Now, probably should spend more time on this one, but I wanted to update also the price action that we saw, excuse me, we see going on, and I talked about before, is FUBO, and the stock symbol is FUBO, and I'm going to bring that up. FUBO TV. Now, a lot of people are cord cutting. There's two things going on. One is cord cutting from cable, and the whole streaming wars. And you know it. You got Netflix, you got Disney, you got Hulu, whatever. And we've talked about FUBO TV before. And you see today it went up 8%. It was up even higher during the middle of the day, where you see that it got up to about $1 more than where it closed, but even after hours it's up slightly. But the thing I would say is you have here a stock that is starting to get more traction. There are developments going on. And we look at this one article. This came out 2 days ago. If you had bought FUBO TV a year ago, you could have 172% gain today. We look down from an article by Zacks from, I think it's 3 days ago. FUBO TV, stock moves almost 1% there. What you should know, why is FUBO TV soared 95% in 5 weeks? So you get the point that things are happening. And what I want you to see here is this is the website for FUBO. And FUBO is not only, I'm going to take myself for a second out of here so you can see what it is. FUBO is very heavy into sports, but it is not just sports, okay? It is also where people can go and get all of these channels, and this is going to have an app where it can be played on your phone, on your laptop, on your big screen TV. It's taking your TV with you, and here you have all of these different networks, whether it's Fox News, FX, obviously ESPN, because they're going to be so big on sports. And the other thing is we see today, here is an article on FUBO. This was published today, June 21, FUBO TV to launch sports betting division and app in the fourth quarter. And that's the other big thing here, folks. You're going to have people I'm not a gambler at all. I'm an investor, and but I don't go around betting on sports games, but a lot of people do. So you're going to have the Fubo TV app, and people will have this to where they can be betting during the course of the game. So it says here in the article, television streaming company Fubo TV is launching a sports gambling division in Chicago for the fourth quarter of this year. Its Fubo gaming subsidiary plans to hire over 100 employees in the next 3 months. New York-based Fubo TV, which launched in 2015 and went public in October 2020, so just last October, first announced its launch of Fubo Gaming in January after acquiring Chicago startup Vigatory. I don't know if I'm saying that right, but either way, the Vigatory acquisition will allow Fubo TV to launch its own sportsbook, putting it in direct competition with DraftKings, FanDuel, Barstool, and other online sports betting operators. The entire 15-person Vigatory team has joined Fubo TV, and that's important because you got management continuity. And CEOs Sam Ratner and Scott Butera have joined Fubo Gaming as Chief Operating Officer and President, respectively. So I'm not going to read the entire article, but you can see it here on YogoNet. And the point here, folks, is I would pay attention to this. I think I own it. I've taken a position. I'll probably be adding to that position, and I would say that that it would be something that you might want to consider. I think when we look at trends, and obviously Humble is a trend in the digitization of finance, that here we have in Fubo TV, you have two trends. The cord cutting, where people are keeping the broadband connection, but they are getting rid of the programming through cable and all the charges that they get for having a remote, having a cable box. Fubo TV, you don't have to have all of that. Their price is on their website, so that if you want to take a look at that, and let's do real quick. I'm not promoting them here. I'm just giving you the information. They actually do have the price down here, which if you don't know, you might not know to scroll down to see this. Starting at about $65 a month, which may or may not save you money. It all depends, obviously, what you're paying for and what can you get. You're still going to need to have that broadband connection. So that said, that's pretty much the point I wanted to make with you tonight, that I think Fubo is something that is also a trend to the future, where you're getting the cord cutting, and we know they're adding a heck of a lot more people, 100 over the next 3 months. They're going to have the app for betting in the fourth quarter. So this is a timeline of activity that we can look forward to on yet another stock, as we have looked so often at the timeline of activity that we see with Humble. And by the way, if you haven't seen this before, and this is the cheat sheet put out, and I'm trying to remember now by, I apologize, I'm forgetting the name. But you see the timeline here for Humble, and we're going to be looking forward now with Humble and with Fubo TV, some trends. On Dig, folks, I wouldn't, if you do want to take a position in that, I wouldn't go hog wild, but it might be worth taking some position, however small you want to do, at what's about just under $75 or so a share. Again, we could see a spike in oil for Dig, but this is a Fubo again, so there you go. And if you want, and I meant to show you that chart, we see here very similar to Humble, where in the early first week of February was the peak, and then it went down, down, down. And the other reason I wanted to show you this is because so many times we think, oh man, look at Humble, it came down, 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 and is this company okay? And I had to keep saying, just wait on Humble, just wait. But you see, this has been the market trend. There was so many companies we have seen had a high in early February. They hit a low. With Humble, it was May 20th. This is almost exactly the same week. And like Humble, we see it come up. And I think that when we look, and there's a one-year chart, when we look at the future, and we're looking at December, as I tape this on the 21st of June, I think there's reason to think that the stock price of Fubo by December would be higher. I think there's no promises. No one has a crystal ball. Remember, that's one of my 10 commandments of investing. No one has a crystal ball. But I think that we're going to see a higher stock price in both FUBO TV and certainly, I think, I shouldn't say certainly, but I think in Humble. And in both cases, at this point in time, if I change my mind, I'll let you know in both cases, I think both of these stocks are something that you might want to consider having in your portfolio over the next 3 to 5 years as the trend develops. And with that, I'm going to let you go. Sorry I went long tonight, but it's been a while since we had a chance to talk. Hope you had a wonderful Father's Day. Hope you have a great summer. Welcome to summer. And in the meantime, please keep watching. Give me a thumbs up if you want. Give me your comments. I always try to read every one of them, even if I can't respond to them all. And folks, thank you so much, and we will hopefully plan on seeing you tomorrow night.